of England tries to stay pat and does nothing at all, then that creates some really big questions, one of which, of course, would be, would there be a much bigger sterling adjustment at some point? The danger is that if you're living beyond your means, trying to sort of finance your balance of payments deficit, not easily, the danger is you run out of money. And at some point, the currency falls very quickly rather than just on a managed basis.
Stephen, does the pound fall further compared to euro? Because European multinationals actually put money, instead of investing in the UK, back to Europe.
Well, David Bloom, our currency strategist, has a sort of magic series of numbers for the end of the year, which is 110, 110, 110. Effectively, euro-dollar's at 110, sterling's at 110, and the yen's at 110. So, of course, that means effectively that in terms of euro-sterling, you're back to parity.
We're going to have to leave it there. Stephen King and Jonathan Lindsay will continue with us at Bloomberg Surveillance on Radio. David Gurr, I believe, has darkened the door of our news bureau here in London as well. On Bloomberg Radio today, Edward Hyman of Evercore ISI. Stay with us. This is Bloomberg.
Good morning for our viewers worldwide. A warm welcome to Bloomberg Daybreak on this Thursday, January 12th. I'm Jonathan Ferro alongside David Weston and Alex Steele. In the markets, it's the Trump trade squeeze. Futures negative, down about 43 on a Dow, negative 6 points on the S&P 500. Farmer under pressure on the FTSE. That record winning streak snapped, maybe. Switch up the board. Treasuries. Bid yields lower by 4 basis points to 233, and a weaker dollar in the G10 space, Alex.
And here's what you need to know at this hour. The Trump trade unwinds, the dollar sliding, treasuries gain, all after Donald Trump's news conference sent a wake-up call to the markets, leaving investors with more questions about the timing of fiscal stimulus and the scope of planned policies. And big pharma bust, the sector losing nearly $25 billion in 20 minutes after Donald Trump said pharma companies were getting away with murder when it comes to drug pricing. And South China Sea showdown, Trump Secretary of State nominee Rex Tillerson saying China must be denied access to artificial islands built in the South China Sea, a move that would raise tensions between the world's biggest economies. And that's what you need to know at this hour. David?
Thanks so much, Alex. Now, turning to that Trump news conference yesterday, the president-elect made it pretty clear from the outset that his focus is and will remain on jobs.
We're going to create jobs. I said that I will be the greatest jobs producer that God ever created, and I mean that. I'm going to work very hard on that.
We're now joined by our politics reporter, Kevin Cirilli, joining us from Washington. So, Kevin, the president was pretty explicit about jobs, and he certainly took on pharma, but there's a fair amount he didn't say about his economic plans and how he plans to stimulate the economy, and the markets are not reacting particularly well today. Tell us about what he didn't talk about.
Yeah, a lot of uncertainty about the lack of specifics coming on economic policy, if you will. Things like infrastructure. How will he get the Tea Party to support an economic stimulus plan? Or even tax policy. How will he, what's the timeline for passing tax reform on Capitol Hill? Things like trade policy. What exactly will he do in terms of renegotiating the Trans-Pacific Partnership? Meanwhile, of course, on Capitol Hill, Rex Tillerson, the Secretary of State nominee, saying that he perhaps likes TPP. So mixed signals, not a lot of specifics with regards to economic policy on that front, all of which leading to, again, that market uncertainty.
So, Kevin, take us to Capitol Hill exactly. What's going on with the confirmation hearings today?
So today we have Dr. Ben Carson. He, of course, is the nominee for the Secretary of Housing and Urban Development. He's going to face a lot of tough questions from Democrats about whether or not he has the experience, because, of course, he is a very well-respected doctor, but not so much a lot of experience in terms of housing policy, which, by the way, has huge financial implications, especially with Fannie and Freddie oversight. I'm talking to a lot of Republican aides up on Capitol Hill. I anticipate for him to get some questions on that, and a lot of people in the business circles here in Washington are going to be paying careful attention to see if they can glean any answers about where he stands on housing regulation.
Kevin, thank you so much. He's going to be back with us shortly, Kevin Cirilli, but in the meantime, he's reporting from Washington. Jonathan.
David, I think, as you say, for the broader market outside of pharma, it was very much what President-elect Donald Trump did not say. The Trump trade unwinds, it's squeezed to some extent, the dollar slumping, bonds rallying as the President-elect failed to provide details on his policy measures during his speech just yesterday, sending a wake-up call, maybe, to markets. The US currency slumping against peers and the 10-year yield touching its lowest level since November. With us now is Bob Doll. He's Nuveen Asset Management Chief Equity Strategist and Senior Portfolio Manager. Bob, it's great to have you with us on the programme.
Thank you.
Kit Jukes over at SocGen in London, capturing this story perfectly in this quote. I want to bring it to our audience. In politically driven markets, the combination of an erratic President-elect of the United States and a market which leaps to conclusions and heads off down cul-de-sacs with manic enthusiasm is a recipe for mayhem. Yesterday was a recipe for mayhem. Why? Because the market's looking to the President-elect as if it's the Fed chair with a scripted read on the markets and economics. That's not what we're going to get, is it?
No, it's not. We know when we elected this guy, things would be interesting. The day after the election, I said to everybody, whether you voted for Donald or Hillary or somebody different, you're going to have an interesting 4 years. I'm not going to get carried away by yesterday. There's no question that things went differently from where they've gone, but stocks are still up year to date. Healthcare still one of the best performers year to date. Markets are a little tired. Don't forget, they're up 25% U.S. equities since last February.
We're going to talk about pharma in just a moment. The squeeze, though, coming into this year, record longs in futures treasuries, for instance. Then you're looking at a dollar with the longs there as well. Record shorts for treasuries rather than the longs on the dollar. That squeeze, is there an inflection point at some point in your mind, or is it just a squeeze for now and then get back on?
I think the latter. That is to say, the direction for rates is up, direction for equities is up, but they've gotten a little ahead of themselves.
Here's what I don't get. We had a 3-year, 10-year auction this week. Both of them were really strong, right? So we have a lot of buying coming in, but we have 10-year break-even still holding around 2%, even though 10-year yields are falling. Explain to me how that makes sense.
Well, I think we're in a period of time. It's still early in the year when the technicals can make things very confusing, and I think that's where we are. Look, we're getting a little more inflation. We're getting a little more real growth, hopefully with a tax cut some more yet. Nominal growth is moving up. That means interest rates are moving higher. The amount of papers outside the U.S. selling at negative interest rates continues to decline.